All right. Let me get over here to the trading view. Okay. So this is pretty cool. We're in the 1 hour right now. I don't know if I'll leave these on. These were previously, this one's actually in. I'm going to leave both of these on. And we'll go into those. I believe these were just fair value gaps that fed on the lower time frame that fed downward movement. And I think we see them inversed here. And these fed significant downward movement. So they're important. And so I left them on there. And they did kind of serve as a good little, what is this here? Oh, that's this fair value gap right here. Okay. And let's just go out to the day, like I said, and we're going to start there. We'll recap the daily movement. Oh, look, and we got a pretty large gap there on the daily chart. We'll see how that looks on the hourly chart. It might not look the same. But again, like I said before, okay, so maybe we're due for a reintroduction. I was fiddling with OBS and I couldn't get my settings right. So all my other videos are just trash. I did about a week's worth. And I'm on here for about an hour. I'm trying to maybe get it down to 45 minutes as I get more efficient. But I do like to cover all this stuff, and I kind of am doing it for myself, or I'm pretty much doing it for myself. So I like to go over all the little price movements through the lens of Smart Money Concepts, authored by ICT. And so I'm just doing my daily journal. I'm recording it, and I'm going over all the price moves that happen in the day, whether I participated in them or not. Right now, I have a paper trading account, and in the last 3 weeks, this is where we're at. Okay, so that's pretty good for 3 weeks. I was doing really good following ICT, and after about 3 or 4 months, I passed a combine with Top Step, and then I did really good for about 3 months, rounded an account up to about 21 grand, and took about $6 grand of payouts, and then I got over focused on the first presented fair value concept, started trying to build my own rule set around it instead of, taking it for what it was. It's a tool, you still need the rest of the tool bag to get the job done. And I was just trying to live off. At some point, I left all other tools in my truck, and I just started using the first presented fair value gap, which can be valuable. But I've kind of had to take a step back, study more. I watched all the ICT videos. I'm going to be talking fast through a lot of ICT concepts. So if you're not familiar with them, things might go over your head, or you might not understand what I'm talking about. In that case, I would suggest just go watching all of ICT's videos, the entire library, and then coming back here. Or maybe you could listen to me say it enough and you might start to understand things. But again, I'm only using his concepts, and I don't understand them as well as he does. So he's able to teach them, and he actually does an effort at teaching them. I'm just going to be recapping. I'm not really going to be recapping the daily market. I'm not really going to be taking too much time to explain all the different PD arrays that he has in his bag, but I will be talking about them. Okay, so that's me. So I'm here to trade, and we'll see how it goes. I might get another account challenge from a prop firm that uses TradingView. I don't know what's up with all this conversion. I'm honestly going to use Tradeify. Hopefully they don't convert. I hope. But you could see, let's actually go out to the weekly chart. This is actually going to be something I'm looking for on Monday. If you could see this weekly chart, that's a huge weekly candle. So if you don't get the thank God it's Friday on Friday, we'll see about it on Monday. That's kind of what the premise is. You see all these lines here, all this crap. As we get zoomed in, it gets less congested. This is just the order block. It kind of it's a down close it's a up close candle in this downward movement, and I believe it got inversed here. Okay, so you could call it an order block, bearish order block that got inversed potentially on the hourly chart. We'll look at that. But yeah, thank God it's Friday, might come down, give back 20. The concept is if it has a big weekly range, you'll give back 20 to 30% of it. If it doesn't do it on Friday, let's look for it on Monday. Okay, that's the premise there on that. Let's go down to the daily chart again. Cool, here's the daily chart. I kind of didn't predict, but I said, I think the daily wants to close over this little space, this whole space, but it took the downside, then it took the upside, so it's completely closed this with a daily candle. So that's a good thing. Right now, it's looking like it's going to take all-time highs. We'll see if it does that. Also, this is going to be dangerous territory for the thank God it's Friday stuff because we are in a bullish market and you don't want to predict a top. Maybe you could predict the thank God it's Friday retracement, but sometimes these things just run and they'll just peak, and then everybody who's on the 2022 models who's looking for this liquidity sweep is going to stack on. Oh, tons of liquidity. Boom. Oh, this is it. Tons of liquidity. Gets you again. 3 drives pattern. Maybe even 4. I'm just saying, there's a lot of people who jump on this is their only model is the liquidity sweep there. The only model for entry. Which case is a powerful one. And if you time it right, and you don't get caught up in like a 3 drives pattern, you'll be okay. You just have to look for those sure signs of it reversing. And then you have to pick a target that's somewhat feasible. Somewhere in there. Maybe 50% of this wick, maybe on the downside, if it comes up pretty far. I'm not sure. I didn't measure that 20 to 30%, but I would just look for an hourly time frame area that looks like it would be a good spot for it to stop, and then maybe try to see if it wants to go to that. But cool. So we're getting in here now, and I believe I had a real big problem with OBS lagging and my mouse movements not getting tracked. So hopefully we're to the bottom of that. Okay, so this is Friday. So what did it do here? Oh, let's go over to this little blue box because I do, and then we'll see these green lines here. Okay. So this is that the up close candle I was talking about that spurted the large downward movement. Pretty large one there. So I have that. What do I have at blue? Because I'm expecting support out of it. I put the red box. All the orange stuff is the new week opening gap stuff. Okay. I'm going to try to do my bullish fair value gaps in green and my inverse fair value gaps in red. Okay. And it's trading up here now, so maybe we'll do this. And let's do exactly what I just said. Let's put these in red. That way I know it's an inverse fair value gap to begin with. I believe this was used as an inversion fair value gap, but now it's maybe a reclaim fair value gap. Okay. On the hourly chart. Let's go zeros too. We want to see that. Because these are all levels it could come back into and either demonstrate support or resistance. Because if it closes up here, because Friday closed up here on the electronic trading hours, this could treat this as an inversion fair value gap, or it could become reclaimed again, depending on the context, right? Say working its way up here, inversion, but if it gets down below 50%, maybe it closes 50% on the hourly, then maybe we're thinking, oh, reclaim bearish fair value gap. Cool. So now we have that, the new week opening gap and these green lines. So now we have some context going into the day. So again, these guys right here were fair value gaps that fed this large downward movement. Okay. And now let's just do what I said again. This is going to have 2 fair value gaps in there. I could date them. That's going to be laborious, so I'm going to leave this one white. I'll get better. Maybe I'll, yeah, I gotta get better at that. I'll start to get more organized with this, but we're gonna leave that on green because it came back into 25% of it. It was actually a pretty cool day. So going into the day, we could look at the hourly chart. Okay, what has it done so far? What has the hourly done so far? This one came up and it closed above this. Okay, so Thursday rejected off of that imbalance we've seen on the daily chart. And look at, there's a bunch of new week opening gap stuff. All right. So there you go. That's what that is. And then it came, closed over 50% of this new week opening gap. Okay. And now we're getting kind of some algorithmic rejection on this new day opening gap. And then definitely on this new day opening gap, we're getting algorithmic rejection, right? To the tick. Okay. Like that line is at 518.25 for this candle. The low of it, 518.25. Okay. So it's pretty on the spot. Again, before we measure that, I'll try to get this one on the nose right there. I think that's like right in there. 22 even. The low of this candle, 21.25. So overlapped it by some 75 cents. Let's just say I'm off. Yeah, I don't think I'm off that far. I think that's kind of hard. Can't get the exact price there on that line, but it's within a handle. 3 points. 3 ticks. However you want to look at it. So we're getting some good rejection. What is this on the hourly chart? This is a breakaway gap. Okay. What did this do? It failed to reach this. And let's see where it closed. We're going to draw a little fib. And then now for this, I'm going to just do 50% from here on out. Settings. Because that's how I like to draw these fibs as we go work through here. Okay, so this one closed back past 50%, but also respected this new day opening gap. So take it for what it is. We'll delete that gap. Let's draw, boom, respected that wick on this side of the fair value gap. We don't like to see 50% of that wick taken. Cool. So on the hourly chart, we're seeing, okay, it looks like it could go up. And then what did it do? It went up. Okay, so it came up, took off pretty aggressively. Ping this, it's the fair value gap up here that fed this downward movement. And kind of rejected off of it. This one opened, came down, and then we found support at this fair value gap. Okay. And, or you could say, yeah, because this fair value gap hasn't formed yet. So this fair value gap that also fed this downward movement was found support there. Boom. Came all the way up here, close to the new day opening gap. I wanted this to happen a lot sooner, honestly. I had one lot in from somewhere right in here. And I wrote it all the way and then it started coming down, and then I was like, you know what? I'm going to get out of there. Got out in an hour and 30 minutes. I'm going to take profit right here, which is the top of that hourly fair value gap. So, had a strong notion that it wanted to close over this. I got to plug my computer into the power source real quick. Cool. Yeah, I had a strong notion that it wanted to close over this imbalance there. Because it's a gap. There's still like there was down close candles. There's only one down close candle in the daily that has encompassed this gap or has crossed this gap. So I had a feeling it wanted to cross it and close over it again. Okay. Just to, patch things up, equally deliver buy side and sell side through this range of price. So I had a feeling it I wanted to see if it would happen, and then it did. So that's cool. So I was like, it could at least come to right here. And this was kind of an interesting point of the day because it rejected off of this and then it came down to 50%, but it's cool though, because you see this rejection off the top of the fair value gap. Okay, now it's going to ping in. It rejected off the bottom of the fair value gap back into some bullish movement. Top of the fair value gap. And so it kind of climbed this fair value gap beautifully. Or I mean this new day opening gap beautifully. Boom. Found a good space to retrace. Boom. Tick 50% of it. Comes back up. Ticks the top. And then leaves. And yeah, it did catapult at the end of the day pretty good. Oh, well, this just happened actually. So this was just in the Asian session. Okay, so what is this? This is 6 p.m. August 25th. This is 4 p.m. August 8th, sorry. August 10th. So this is our new week opening gap. So let's outline that right away. And we'll draw a fib in here. So let me get this pointer out. And I want to make these lines actually a little bit bigger. So they stand out. This is kind of fresh. I love these new week opening gaps, bro. All right, cool. Now let's add some text onto this one. Settings, text. And this was on the August 10th, so 8:10. So August 10th. Perfect. Cool. So now we got that. Now let's get this little Fibonacci action in here. And again, I like to do these on the hourly chart, and then I could also look at the daily chart and see the bigger gap. So I'm aware of the difference in the two, the way I have my chart set, because this is showing the end of I like to see the gap between electronic trading hours and electronic trading hours. Okay, but on the daily chart, the bodies are right now set up to just show the end of regular trading hours. So that's what I like, to be able to see both sides of it. And I'm going to change this line. We're going to do all quadrants of this one. It's a pretty decent size one. So that's what I like to do. And I'll do orange. And then we'll do orange. And then I'll do orange. And there is a labeling feature on these fibs, which is cool. I didn't realize that. But if you hover over them just right. Not with the fib tool selected. You could add text. So I might start doing this to these fibs. I probably will. That way we could get I could have this new week opening gap and the exact price. So then we could easily pick up we get some exact prices in there. You saw me fumbling around that line earlier. I couldn't get the exact price on that line specifically. I think I got close to it. Maybe I did get it, but this whenever you have the snapping tool, you get the exact price. Okay. All right, so that's the hourly. Let's go into. I'm going to go straight down into the 5 minutes from here. I could start studying the 15 minutes, but fudge. I said that now. My conscience is not gonna. It's gonna be unrelenting. It's gonna be haunting. If I don't do that. It says, I should do this, and then you don't do it, and then it's like, oh my God. Again, that's delineating the hourly fair value gap right here, and I should have that labeled. We'll work on it. Cool. And then we get these rejections, these nice little rejections off of this new day opening gap. See, we're getting a lot of algorithmic action here. And this is that one bearish order block. Okay. Didn't reach the top of it. Came down. That's rejection. Boom. Took a little bit of liquidity. But these kind of signatures like this are what kind of are giving me more confidence. And, I'm thinking I had the larger time frame idea that I wanted to close over that new day opening gap. So I'm getting these algorithmic signatures. So it's like, why could you take a bullish trade here potentially in my mind? So I'm trying to, because it would be hard. It used to be harder for me to get in on action like this whenever there's liquidity resting over here, because everybody's looking for that liquidity sweep to get in. Look at double lows. Maybe that's a target for the future, but why not? Well, we're in a bullish market. That's a breakaway gap. Treated it as a breakaway gap there, and if we're right, this one should respect it. It did, and it got this algorithmic rejection. I'm going to call that signature. Then we get more signatures right here, in my opinion. So then with all that stuff happened below here. There's a lot of price moves below here. Where's price thin at? Up. What type of market were you in since it closed up here? Bullish. So now we could kind of maybe be more confident in taking a trade to the upside. Okay. What do we got here? A 15-minute breaker. Low, high, lower low. And I believe right around this zone, or maybe it's this zone, we get a breakaway gap. Maybe somewhere around this breaker. So we'll watch this zero right here as we drop into the time frames, and we'll look for anything that could have been taken at open, but we don't like to do that. We like to wait first 30 minutes, but sometimes these breakers kind of allow you to get in maybe a little bit sooner. Cool. So no real entry here on the 5-minute. We're looking at this. Market open. Came up. Couldn't be too confident of a buyer there with that strong rejection. Even closed below 25%. So we're still waiting there. And we're going to go over this whole thing in the 5-minute. I should have gone over the top end of this, but the real move is right here. Close the fair value gap. Does it so? You got, this is the breakaway gap. So on the 15-minute, there's no real entry to get in. Climbs up, order block right here, and that previous, now it's showing support. So we also got an order block right here. Boom, boom, boom. 3 consecutive up close candles, or it doesn't matter how many up close candles on the right side of this bullish order block. It just matters that there was some movement, out of this. Right? If it was like meandering right above, then maybe we wouldn't have, I find that better order blocks are ones with some pretty strong price movement away from them. So that's the kind of touched in there. What did it also touch? The top of that hourly fair value gap. Boom. Shot up. So that's some confluence right there. Boom. Shot up. Failed to reach this gap. That kind of shows you it's going to want to come back up here. That could be an indication. And it's also showing you that, hey, it failed to reach this gap. It's going down for now. So it starts going down, closes on this side of the gap. Looks like it's going to get initial support at this fair value gap, but doesn't. Or it kind of does, actually. Logical place for a little retracement. Comes up, doesn't quite get to 50% right here on this retracement. So now you're thinking, okay, yeah, it's probably going to go down. Where does it go to? Takes these stops. You could see that more exaggerated on like the 5-minute and the 1-minute chart, but takes these stops. Also rejects nicely off of the, just because this is a bullish fair value gap on the hourly chart, it rejected off of the top half of it, and then it rejected off of the 75% mark. Not even coming close to the 50% mark. So with this hourly fair value gap, that's what we like to see. And I believe this hourly fair value gap was formed right here, right in this zone. Yeah, right here. It's at the high of this candle or something like that. So this was just formed. So this would have been pinging on. This was a new formed fair value gap, tick, tick on that newly formed 15-minute hourly fair value gap. If we could zoom in out after I get done with this whole little presentation. What does it do? Rejects off of that. Touches the top of the fair value gap. We don't see strong rejection off the bottom of it. Then we get it there. Okay. And it comes back up, meanders over the top of it for a little bit. There's that top of the hourly fair the gap that we talked about at the beginning of this lecture. I'm not going to go back out to see that again, but you could check it out if you want to rewind it or go to your own chart. And right here, hits off that 50% mark, takes this little stop, hits off the 50% mark, and launches for the end of the day and gets pinned up there. Okay, so there's that on the 15-minute chart. This was actually a nice little downward movement, but actually small. Crazy. I thought that was a lot bigger. I'm doing this demo account, and that was within 3 weeks I got it up there, but I'm starting to use like just a little bit of extra size. So I was in like right here or something. I got in because I figured this would be a strong place rejection, and I got out with quite a bit of profit just like right at this candle. And I thought this was a lot in the time because the profits skewed up because I have more lots on than normal, and I thought this was a giant movement down, but no, man, and not at all. I also got this this long from pretty early, but I only had one lot on it because I'm just too early for that. 5 minutes. Okay. Are we just in the 5 minutes? I thought we were just in the 15 minutes. What the heck? Okay, this is actually... we just went over the 5-minute chart. 15-minute kind of shows you the same thing. Sorry about that. Kind of shows this rejection off of this... upward rejection off of this inverse fair value gap. What is it also doing? Climbing this. It's climbing up the fair value gap, and it's climbing... and it couldn't, after it passed 50%, it couldn't reach it of this green. So that was the older fair value gap that we're saying it's reclaimed now where I am. Pinged off it there and then climbed it up there. Okay, but more importantly, you can see the climb on this, which is cool. And this just happened. Where's it going to go to? We don't know. Maybe new highs. Maybe everybody gets that. Infamous liquidity sweep to large downward movement. Yeah. We love that. Okay. Since I already did the 5 minute, we're going to go down to the 1 minute. Let's see how this works. Or, I was kind of bagging on that liquidity sweep. Sometimes they'll send it up there 3 times, run stops. But sometimes they just take the liquidity and then it dives down and doesn't really give us a great opportunity to get in. I mean, it's a strong thing, but like I said, sorry I bagged on it. So check this out. This is the open. Gave us the first presented fair value gap right here. Okay, so now we're looking like strong bullish action. This one opened here. You could say it made the breaker right at the high of this candle, which is right up here. So that's a big breaker right here. You can even see it on the low, high, lower, low, low, high, lower, low. I guess it didn't really make the breaker until this candle right here, that wick. But that would have been a, early entry. But you could have put your stop right here. Or if you really wanted to be cautious, you could have put it, at the bottom of this order block. This rejection right here was pretty sharp though. And it closed back inside of the 25%, of this 1 hour, I think inverse bearish breaker or order block. Sorry, 1 hour inverse order block. So close inside of it. I kind of use this to judge that a little bit. So that honestly, with that, and it wicked, but the body stayed inside this fair value gap. What did it also do? We respected this breaker formation here. There's like a double breaker formation. 1 breaker, 2 breakers, and it respected it. So on this breaker, theoretically, you put your stop on the the higher leg, and same for this one. So if you wanted to, oh shoot, it cleared the breaker. Let's get the entry on the way back into it. I find this type of action, because I mean, this took this liquidity. This is some liquidity here, and that's exactly what this is kind of done. But after you see that rejection over the top of these 2 breakers, this could have been a good opportunity if you're confident. And then, you just, say, hey, I'm taking a shot. I don't really feel like, I'm starting to see this formation a little bit more. I don't know what the odds are on this succeeding or not. But after you see that rejection, you could say, hey, I'm taking an entry. Or I don't want to, no, don't say, this is not financial advice. Don't say that. I'm just speaking hypothetically to myself. But this is something that I had my eye on as it was playing, as this our market was playing through. And then, okay, so we get this, boom. And then we get this rejection off of this first presented fair value gap, barely touched into it. At this point, I'm not so confident in institutional order flow intradrill being a thing, but and you could see that it's leaving fast. Okay, so I got in right here, and I got out like right here or something, or maybe like right here. No, actually, I got in. I survived this retracement, and I got out right here because we got rejection off the top again. I didn't know what it was going to do, but then it ended up going to my initial take profit. But anyways, neither here nor there. I don't think I'm going to show those entries. But so take it for what it is. My word. All right. So what do we get here? Institutional order flow entry drill. Great stuff. So let's say you're in the trade. Let's say you're in the trade here. Let's got the first possible entry. You get this first presented fair value gap. Okay, that's the first place we're going to. First, we got the breakers here. Oh, shit, we respected the breakers. Is it going to challenge them more? Yes, and reject it. Cool. So we got one thing on our side. Here we get the first presented fair value gap. All right, let's see how it treats that. It ticks into it, rejects, leaves. Okay, now we're working into that an hourly fair value gap. I don't know. Is this? I think this is just the new one that's being formed right now. I have to check this out. We'll do it right now. Yes, that's the hourly fair value gap that was formed on this day exactly. So we haven't formed that fair value gap, so I can't talk like we have. Okay. That's not what we want. So it's forming this fair value gap on the hourly chart. Okay. All right. So we got this. Oh, shoot. Okay, so this, we got this. Okay, that's good. That happened. We're back over the breaker. Now we've hit. We're over these breakers. We respected those. We're over this breaker. Just leaves it behind. Doesn't even attempt to back. It's fair value. Right. Well, again, we're looking kind of we get right around the value download. You just have to trust me. I had that all on video record, but again, I was having issues with OBS. What time is it here? So this hourly fair value gap is still being formed, and it doesn't actually. this is actually what forms the entry of that. So now after this candle, this is yeah, so 10, the candle closes, the 10 a.m. candle closes right here, and this is all New York time. Boom. Right, and then the next hour, this is the wick, and then the beginning of the imbalance on the hourly chart, the buy side imbalance. Cool. And so from here, we get this. That's cool. Respects that. Let's just see what kind of respect it gets. Let's change this. Let's go blue just because we don't got a lot of bloodlines. So we're going to leave that on there. We're going to talk about that. Okay, so this is a fair value gap. Boom. And it's even in the, and then again, this is forming the hourly fair value gap. So this is like higher time frame to lower time frame confluence. So now at this point, this hourly fair value gap is formed at 11. So 11, now we have the now we have 2 hourly candles printed, and this is the bottom of that hourly fair value gap. This is the top of that fair value gap. Okay. But let's continue the bullish story. So we got this fair value gap. It respects 50%. Boom. The moderate target or low-hanging target, if you're in, would be the bottom of this new week opening gap, which would have been tagged right there, and then you'd have been good. Okay, but we're still in here. It's giving us this retracement. What can we hang on to here? What is allowing us to stay in this trade after this retracement? Because it looks like it's headed south, correct? It gets this. Okay, so it didn't get support here. It got support on this previous fair value gap that I thought was important. It had a big bearish downward movement. I said that already so many times. Got this little chunk of price. Let's say these two candles, because this is a pretty leg up. It is a little bit back and forth, but let's just say these two candles are a bullish order block. And we wanted to see, like, okay, so now we're desperate to see a PD array form, or to see a PD array give us some support. So we're drawing fibs on everything. Where could it find support? Boom. So this would be considered an order block right there. If you're in here. Also too, looking at this, I'm thinking, okay, it just gave that back. It's not coming to that until it reaches significant. It wants to get to the top. That was my whole narrative, is it wants to close over the top of this gap. And so that gave me enough confidence to hold. But if you're looking for something to, okay, so you got this 50%, didn't touch that. So now we're feeling good. Still bullish. Boom. And then it starts crashing down here. Okay, what is our hope to keep it? What do we think? What can we use to, tell the bullish story, or keep that idea alive? This little order block right here that fed this big upward movement. Oh, that's not a freaking order block. What am I saying? That's not the right one. What am I doing? That was a little fishy. Sorry about that, guys. This would be the order block, which actually tells the story even better. Fails to reach the order block, 50% mark. And then let's see where, okay, so the open of this, this would be the bearish order block for this upward movement right here, this red candle. Sorry, I was freaking messing that up. That's why I'm doing this, get more familiar. The easier I could talk about it, the easier I could, get these ideas in my mind, the faster I could see them on the charts. Cool. So let's see the open on this candle is 627.5. The low on this candle is 627.75. So it ticked into it by a point. The low on this candle ticked into it by maybe a handle. Cool. But it also, yeah, so that's that. Boom. So then this could save you. Okay. And it didn't even get back to this fair value gap. So you really could have, it really didn't give us any, it gave us this fair value gap actually. So with it, kind of immediately screwed it though, honestly. Kind of immediately got it going, kind of invalidated it right away. So maybe we don't use that one. This one, if you wanted to try to go short here, this would have been an inverse fair value gap, but it really hadn't got on its work done. So I don't think that would be an advisable short there. And it's a quick movement. We don't really know where that's going to go. But, and again, this is just me talking through. Maybe I'm not sounding the best right now. Because I made that mistake, but whatever. Cool. It rejects, almost gets to the top of the fair value gap. And then now this is where we're seeing some really obvious signs that it's going to take a pretty far turn south. What is it going to do? Take stops. So after it took these two stops and it even respected 50% of this fair value gap on the 1 minute chart. And then this hourly candle, this hourly fair value gap is formed. It touches into 75% of it and rejects. Okay. So there's that. Bam. And I think earlier I said that this little low, this is what made the fair value gap. It didn't. This is the only rejection off that bullish fair value gap that we've gotten. Okay. To clear things up. It's Sunday and got a little away from price yesterday. But as I go through the week, I'm going to start cooking and stop fumbling up so much. I really think I have a pretty decent grasp on some of this stuff. But it rejects off of the newly formed bullish fair value gap delineated by the white lines for the first time right here. Okay, we like to see that. And it also respects this 1 minute fair value gap. Doesn't get into this. Okay. How do we know that this is going to go down? Okay. This would be your bearish order block right here. All right. I used to have these extend right. Okay, so that's just over that bearish order block. Once that was formed, it failed to get here. Down close candle. This candle right here, whenever it wicks past the body, makes this an order block. So this up close candle that's close to 50%, well, this hasn't been really validated as an order block yet. Maybe, it's the last up close candle, the farthest one up. But even this guy, once it gets wicked through, this green candle also gives support. As you could see, this one wicks pretty high, but doesn't get to the top of the order block, and the bodies are all closing below 50% of this order block. So that's like the first sign it's turning down. Okay. This candle, this up close candle closing beneath this one is even a really pretty obvious sign that it's turning down. Okay, so you're starting to see some multi-level, respect of this, all the green candles, or rejection off of all the green candles, which you'd want to see, right? And then this last one comes up inside. I think this might be called a propulsion block. I have to study up on that a little bit more, but it's a green up close candle inside of an order block. I don't know. But anyways, bam. Now we're looking at this. Now you're like, oh, crap. What's going to happen now? Is this all we get? And it's turning down for the day? Well, like I said, we have some strength down here. Now we have an hourly fair value gap. And we have this. And it doesn't like to return to these too much. It can and it will. But like I said, I think that there's we're in a bullish market. All-time highs are right there. And we got this imbalance on the daily chart, or in the hourly chart, and on the daily chart. And so I feel like it wants to close over this. So I don't think this didn't scare me too much, even though it did take me pretty far down. Probably would have been probably better to close like at 50% of this gap and then see what it's going to do. Or even take even this target right here into that inverse fair value gap, or into that bearish fair value gap. because this is a big, very bearish. This is a bearish fair value gap on the way back down on the hourly chart. That would have been beautiful. That would have been a great take profit to begin with. Okay. Because it's rejecting off of the bottom of a bearish hourly fair value gap. That's common. That's like, whoa, that's an hourly, thing. All right. So we're getting that. And now we got this. So we're looking for a pretty sizable downturn. But like I said, I don't think it was going to, it's not going to be a daily reversal or nothing. Because it's still left a little bit of work to be done to at least wick this. All right. And like I said, I think it was going to close over the top. So we're getting that. And then this is kind of what I really like to do, is just break down all this little crap. Bam. So now, boom. Okay, so this is so for the, I think I got that right. Let's make sure this is on the, yeah, that's right on the bottom of that low of that candle. Let's redraw it just to make sure. Yeah. So this, you're like, okay, it was looking like it was going to maybe come up at even validated 50%, or in like it closed past 50%. So then what do we look at? That wick right there that formed on this side of the fair value gap doesn't even touch that, doesn't completely close the fair value gap, kind of colors outside the lines a little bit here. Fails to come back to the breaker, but hits the break, or the order block, but it hits the order block's wick, starts to reject again. Okay, and then we get the support off of that. That could be seen as inversion. Okay. For now, there's all this context, guys. This is a 1 minute fair value gap that was using a big downward movement. So I kept it as important. All right. And you see you get support, inversion. It inverts that 1 minute fair value gap here. And it comes back up. Where does it come back up to? Is it like right here even? We're thinking, oh, is it going to push back through? Is it going to push back through? What do we take a fib on? You could take a fib on this guy. This would be the order block, the bearish order block for this downward movement. And what are we seeing there, guys? A whole lot of support, or a whole lot of resistance right there on that order block. So after you see this close, you see this, you see the wick, then we're like, oh shit. Maybe we're in for a little ride here. This would have been an advisable space to close. Because now we're failing to get that. If you're waiting for this, because you don't know how far this is going to really go down. For me, at least, that's what I'm thinking right now. And I could have saved myself a lot of mental equity getting out of the trade and potentially entering again, but this didn't really give a good entry. One thing I'm not talking about yet right here is time. But if you notice what time it is, it clicked into 11:30. So honestly, around that time, you should expect a stop run. 11:30 to 1:30. It gets its job done early and it runs stops. That's another thing about this whole situation right here, and why I still felt safe with my entry down here, is because it's clicked into 11:30, and these are the stops it wants to take, I believe. I don't think it's going to return to this gap. Okay. Because of the time, 11:30 to 1:30, lunchtime, stop runs. It could just, distort time. It could do a lot of things, but one of the main things it likes to do is the stop run, as far as I know. Cool. So it completes its task. And again, we checked this order block, respected it, and then it went down. And then it comes back up. Oh yeah, this is almost it, because we already are close to the end of the day. And then, all right. And I'll try to get more clear with this, and I'm going to try to get better from going in and out of time frames and stuff like that, because some of this stuff may get a little confusing. Again, this is the green one is on the hourly, on the big time frame. On the hourly time frame, this is a big green fair value gap. I include the weekly imbalance, the weekly gap, or the new day opening gap is inside of that, and then like So it was unfairly delivered. Like this is the actual gap, right? But it was only delivered on the buy side from here to here, and then there's the gap, and then down. All right. So we're in the upper half of this portion, and we're inside of this gap here. So it would have been hard to get in here, but like I said, the narrative is we want to see it. We think there's for me, I think there's going to be a daily candle to close up here. Okay. So then we get this breakaway gap. After it takes stops, it leaves there pretty quick. This could be a rejection block on that wick. You do see this 50% of this minute order block, last down close candle on an upward movement. You do see it kind of the 50% get violated right here by these down close candles. All right, but we do notice that this right here, this wick that rejects off of 75%, and after it takes stops, it doesn't, the high doesn't get taken out, and doesn't really respect 50% of that either. That'd actually be an interesting study right there. Oh yeah, and it just barely touches, so it doesn't, it's 50%. But this blue line is fair value gap on that minute chart. This guy. And that's 50%. So that's algorithmic signature right there. And then it rejects above 75%. Pings 75%, also 50% of this wick. So there you go on that. Just leaves this. And then now this is whenever this really gets inversed. It closes over it. You see, touches the bottom, closes over the top. Opens right here, rejects out of it. So that was an inverse fair value gap right there that fed a large downward movement. Now it's responsible for feeding a large upward movement. Comes to the top of the gap, meanders around in here. I mean, this is going to be really hard to get in on. And like after, like, maybe if you caught the stop run up, and you could have maybe been in on that stop run if you were brave, right? And got in at the bottom of that. But in your target should have been like maybe the top of this, or it could have been, or my target could have been. That would have been a good little entry, hypothetically. Again, this isn't advice. I'm just talking to myself, but I'm acting like I'm talking to people. I literally have 0 followers. So, and then bottom of that fair value gap, hourly fair value gap, rejects out of that. Look at how strong that hourly fair value gap held up price. But the market wants to do what the market wants to do. And then so now it's rejecting off of the bottom of the gap and 75% of that whole imbalance, right? Buy side delivery, sell side inefficiency, busy. Buy side imbalance, sell side inefficiency. Yes, because buy side was delivered, sell side is inefficiently delivered. And then it got inversed. Okay. That whole busy got inversed, but now it's a reclaimed busy. All right. That's what these green lines are showing. Okay. This could have been a potential. You see this. Okay. It rejected off of that. It's rejecting off of the bottom. Then it pinged off the 50%. This is even still hard for me because then now it rejected off of this again. It touched the top. This is a hard entry to get into because it's showing signs that it wants to continue or even bust down like far. It's acting like Tatiana. Just kidding. That was just a joke and it's probably cringy, whatever. But anyways, here we are. Boom, it comes up, feeds us fair value gap. And then now we're like, okay, cool. Now it hits the top of the reclaimed BISI on the hourly chart. And then where does it go to so far? And I wanted to see, I thought it was going to close over this. Kind of crazy. It did. But this was I was like, dang, okay, so this makes sense now. 50%. And then now I actually got in on a short right here. Just had I literally on the like on this line I had a limit entry, right? And it ticked me in or whatever, and then I had to sit through all this shit because I thought I was gonna go lower, but I closed like right in this zone because I was like, oh shoot, actually, you know what? I was looking at it and I was like, huh? It ran these stops. It ran these stops. Rejected off the bottom. This looks like it could go up again. So I got out at the right time. To catch this, the last, the last day, the end of the day prize or whatever, that would have been hard to do on the minute chart looking at it. Because let's see what it looks on the 5 minute. I don't think it looks any better on the 5 minute at all. Like, there it is again. Okay, cool. It looks actually a little bit better. This is a feasible entry on the 5 minute. You could say, okay, rejection off of the 5 minute. Okay, and then now it opens. Boom. Now this candle on the 5 minute could be an order block. After this wicks over it. But actually, if you're really just playing the bodies, now you get the body to get wicked over. Okay. So if we've seen that. If you're a fib master and you drew this thing on there, is that the one? Is this as far as it's gonna go? I mean, that'd be a good one to draw a fib on, right? As it forms on the 5 minute, why not? Because it's on the 50% mark. It closes but it kind of validates the order block pretty much. If you go with the crossing of the body of this candle, validates it. And then what does this one do? 50%. Comes back up, rejects. What does it touch? 50%. And then it leaves. So that would have been your best chance there. I didn't really get into too much breakers. But on top of that, now we're already talking about, no, I wasn't even looking at the right one. This is at the top of the damn movement. Yeah, okay. So this is the one I was talking about. Oh my gosh, I'm all over the place. That just happened tonight. And that was rejection off of the top of the new. No, that was like the old one, right? Yeah, cool. That's 730. All right. Yeah, that's the new price move. But there you go. That's what happened already. It's 8 p.m. New York time today. All right. But this, 5 minute would have been hard to get in there, just like I was saying on the 1 minute. Let's go back down to the 1 minute. I'm going to get rid of that. Again, this is me just rambling through price. I was a little disorganized. I usually do these right after. This is Sunday. I had to fix stuff with OBS. I usually do these right after the day, so I'm a little bit clearer, a little bit sharper, and I'm not messing things up. Okay. This is the new gap that we have. It went all the way up here and it pinned. Okay. Okay, that's where we close electronic trading hours, 6:04. No, okay, let me make sure I got this right. 6:02. 6:00. So what is this? How is this right here? 4:08. Where's 5? Do I got this on there wrong? It's really right here, right? Huh. Well, I'm going to figure this out. But let's go back out to the hourly and let's check this out. I think I drew it on the wrong candle. But then we could kind of recap what we're looking at too. That was weird. And hopefully this one actually records. Okay, so shoot. This is that Bissy, guys. that I was telling you about on the hourly chart. But it also has this in there. This is that hourly fair value gap that it started rejecting off of. This is the newly formed fair value gap. And now let's go sort this new week opening gap out. Because it doesn't right to me. Okay. This is 4. This is 6 p.m. today. So according to that, that's correct on the hourly. And I have been drawing all these off of the hourly. Let's go down to the 1 minute. And they kind of been serving their purpose for me a little bit on the hourly. Which shows the close on the hourly chart. It should be the same. I could have just been confused. Okay. That's the confusion. Okay. Maybe. Okay. This is the close right there. Electronic trading hours. Actually, not so much. Oh yeah, this is 6 p.m. So this is the close. But on the minute chart, it opened up right here. But this is really dodgy. So there's, according to the minute chart, oh, I read that all wrong. Gosh, let me get this shit out of here. My mind is just not here today, guys. I apologize. And this is my first one, so you'll see me get better. This is the new week opening gap, guys. It's fucking tiny. Oh my god! I'll show you where I was messing up. I was going to the close of the hourly candle. All right, I'm tired. That's it. This is the new week opening gap that we have to work with. But whatever. I kind of already explained this little rejection off of there. So if we're in this zone, or maybe we'll just see these stops taken. 50%, boom, boom, and then it come up from here because we got a little algorithmic signature here. Maybe this is what's going to, maybe we meander around before it takes all-time highs. Morning opens, bam, hits this 50% of the bearish fair value gap becomes inverse. This fulfills its original function and becomes bullish reclaim fair value gap. Bam. These are both hourly levels. Equal lows. Wha-bam. Let me see the hourly chart right here. And then this is it. This is it. What does it also give you? Oh, we're going to love this. That's good. That's a good area for retracement. Close to 50% of this order block. Let's see where that's at. One wick to rule them all. Fa-bam! All-time highs. Just kidding. All right. That's it for me, guys. I'm getting out of here. Hopefully OBS did its thing and recorded properly.